Good afternoon, everybody. It's Matt, aka the Lumberjack Landlord. I've got Mike Zuber from One Rental at a Time. Mike, we are here to cover topic number 3, and this one's near and dear to my heart because I was called a moron. I was literally told I was a moron for not understanding this, and I completely understand it. I just disagreed.
Yeah,
but
I could totally be a moron, but yeah,
hey, we covered that video last week when I didn't properly and accurately price my units.
When I gave you 2 attempts to save your ass.
Give you 2 attempts to get off the hook. Yeah, and I was just like,
no, I'll stay here.
No, I'm good. I'm good, Mike. This is good. Yeah, so I was already a moron last week.
Yeah.
Good news is I didn't repeat it. And so what I wanted to talk about, where I was called a moron, was in one of the comments of one of the videos that the Three Amigos did yesterday. Was I said that your 2.5% debt on your house, the rate on the debt on your house, if you refi when it was 2.5 points, I called that debt an asset in the future. Because I believe, largely speaking, there might be a dip where it's not, but I doubt it. I believe that that very well could be, short of World War III or some massive calamity, worse than the health scares that we've had over the last 2 years. I think that that's probably the cheapest debt that anyone ever gets.
Well, I'll go one step further. Please. I hope it's the cheapest debt we ever see. I mean, think about what it took to get 2.5%.
Yeah.
We shut the economy down, which I have to admit, I didn't think was possible,
Yep.
But it happened.
Yep. Sure.
The Fed took rates to 0, which, oh, by the way, has happened before.
Sure.
But we rained $4 or $5 trillion, literally helicopter money. We paid people to stay home. And then the Fed bought not only treasuries, not only mortgage-backed securities, they bought corporate bonds.
Yeah.
The Fed did things that I didn't think they would ever do. The Fed kept rates. I mean, to think about all the amazing once in a lifetime things that happened to get us to 2.5, to have somebody think we're going to get to 1%.
Yes.
Hurts my head.
Yep. That's the statement I was called a moron about. I was called a moron because I was told that rates would go to 1% by 2030.
Well, again, I hope so. I have 10, 20, 30 million bucks. I'd love to refi at 1%. That'd be awesome.
Heck yeah.
But no, just no. And again, I hear comments like that a lot.
Sure.
There is a feeling that the Federal Reserve is going to relent when Wall Street cries. I believe over the last 20 years, you have been correct. Yeah. But folks, like all the crypto people say all the time, zoom out, zoom out. All right, folks, well, zoom out on the economy. Go back and look at the 70s.
Yes.
The answer is in there. We have inflation like we haven't had since then. They have to break the back, and it's going to be painful. Assets are going to break. Rates are going up. Fed funds are going to 4%, in my opinion, next year. And we shut an economy down. We rained trillions of dollars on people to stay home. The Fed bought not only treasuries, mortgage-backed securities, they bought bonds. And you think we're going to go lower than 2.5? Again, I hope we don't, but I would love it if we did.
So another element to this too is if rates go down to 1%, right? That makes basically freer than free money because we had a bunch of free money for a long time. Now this gets freer than free money because it's 2.5 down to 1%.
Yeah, I'm gonna find a more. Keep going. I'm gonna find a mortgage.
So one of the things that is very interesting is, again, we talk a little bit about crypto, which we did in video 1. But on the crypto side of things, why do they think that all the free money that went into the market only went into housing?
Oh, geez. I can tell you it went into NFTs and cryptos and meme stocks. The retail traders dominated more than the .com crisis.
That's right. So you probably need to consider that a ton of that money that came into the market went into your coins. Here's the thing that people need to look at. Is it really a hedge against inflation? It's proven it's not. Is it really a hedge against the market? It's proven it's not. Is it really something that's a storage of wealth? It's proven it's not. So I'm not going to say what it is. All I can tell you right now is what it's not. And it's not those 3 things. And for people to believe that a bunch of the money that flooded into the market somehow avoided finding its way into crypto, you couldn't be more wrong, especially because a lot of that money went to these altcoins, and a ton of them have been rug pulled. The safest one, the one that's going to moon, safe moon, 90% down. And they're trying to figure out how to recapture any level of actually having a real coin.
Yeah.
So all I want people to do is consider that. Consider the data. Look at the data. And again, that money entering the market, and if money gets down as cheap as 1%, there has been massive calamity. And when rates go to that number, who does it affect the most? Who gets the most rich when it goes down to 1%? The rich, because they go grab a bunch of it.
Well, well, here's the deal, right? The people that win are the people that already have assets,
correct,
and debt on assets. So I just did the math on $1 million. It's just a round number. So if you borrow 30-year money at 3% $1 million, I just try to keep everything equal. The payment's $42.16. If you go to 1%, same deal, $1 million, 30-year fixed, it's now $32.16, which is exactly $1,000 different a month.
Mm-hmm.
And let's just assume you had $20 million. You refi 20. Let's assume you had $20 million in debt.
Sure.
And it was all at 3. And now you can refi at 1. You just made 20 grand a month and didn't do a thing. Oh, by the way, you and I both know that real estate is built on terms. So now let me do the math and figure out at 1%, what does the house become worth to get you back to 42.16? This ought to be interesting. Let's assume it went up 20%.
I think it has to, doesn't it have to go up 40%?
Well, yeah, 20%.
Or 35%.
So now 1.2 million at 1% is 38.60. So that didn't do it.
Yeah,
Let's try 1.4.
I think it's 1.33 million is what it would actually have to go up, or have to be.
Oh, look at you. So 1.333000. Yeah, close enough. You're within $50. So again, if you own an asset that was worth $1 million, the rates went from 3 to 1, you could have the asset go up 33% and the payment's the same. We buy on payment in this country. That's so right. If you own a bunch of assets and rates go down, you win. If you are a moron and you are waiting for rates to go down 1%, what the hell are you doing? The asset's going to go up. This is just math, people. Right. It's right. The only people that win who own the asset already.
Right.
When rates go down. It really drives me crazy. I'm going to wait for rates to go to 1%. So you're going to let real estate go up 33% then, are you? Is that what you're doing? Oh, that's a great idea.
The better bet, Mike, and this is where time in the market beats timing the market, like what we talked about yesterday, is we bought stuff in a really horrible time. And yeah, we bought it at 7%, 8%.
I did it at 12. I paid 12% once.
Yes. And those assets were 100,000, 150,000. Now they're 450,000, but we could have refied 70% loan to value, pull 30% out, still own the asset, still have it cash performing, and have put hundreds of thousands of dollars per unit into our pockets. That's where if you're in it for the long term, you're able to see the tops and the bottoms. Right now, money's still really expensive. The house values are still really expensive. They're starting to turn. The top of the tide is starting to roll, or top of the wave is starting to roll. But 6 months from now, that's when you're really going to see some of the bigger differences. And I think that, again, all you're talking about is the slowing down of appreciation, because what I'm talking to people about is, okay, fine. They put a price out there and they've done 2 reductions. If you look at the number that they're at right now, you need to be comparing not just market to market, but sale to sale is the more important number.
Yeah, you actually, a list price is nothing.
You
have no agreement. A transaction is a willing seller and a willing buyer.
Right.
If you only have one side of the transaction, it just doesn't matter.
We have in our market one multifamily, small multifamily, between 2 and 4 units.
Okay.
It started off at $695, which was 150 grand more than what anything else is traded for like that per square foot, at least 150 grand. They took a 30K reduction and another 30K reduction. They're still way $90,000 off where that thing should trade.
Wish pricing. Right. And again, people are seeing this in their MLS going, see, price drop.
it's not a price drop. Look at what that house.
It's not a
sold for.
value drop.
Right. Look at what the house sold for last year. Look at what it will actually trade for this year. I'm willing to bet anybody that that property will trade more for it this year than it did last year, that same type of property. And I think it's a 2,700 square foot, 1-bedroom apartment building, small multifamily.
This is what I'll tell you, that property will sell for more than last year, or it won't sell.
Correct.
Because sometimes the seller goes, people don't understand. My house is special. They don't understand. I'll wait for a better market. And then it just comes off.
And the crazy thing is too, is the rents on it are 30% off market.
Yeah. So there's some value there.
So there's, I mean, it's crazy. So yeah, Mike, thanks so much for taking care of this with me. I just, again, I know.
I'm sorry. Somebody called you a moron. You're not, you're a nice guy.
Just be right.
Yeah.
Just be right. I've proven that I can be a moron. Just be right.
Yeah. The last thing I want to say, I've been thinking about it for the last 5 minutes. Let me just tell you, if you're the person out there that says you're going to take action when 30-year money is 1%, I just want to promise you, you're not that person. Because you know how bad it has to be out there.
Right.
And again, I was buying in 2010 where money was scared. It would have to be worse than that. All of you would be afraid. You wouldn't take a dollar out of your ass to do anything.
Yep.
Just how bad it would be. Oh my God, it'd be so bad. No.
Mike, the stones that you have to have to do and buy like we bought in 2009, that is a rare person, because we're walking into the bank going, we'd like to buy one of your 300 troubled assets. Yeah. And they're like, would you like a snack? Could I get you a drink? Would you like to sit in my office right over there? It's nicely and more air conditioned. Like they would roll out the red carpet because they were getting calls on properties.
No, it was a
dead market.
I wish I had pictures of it. I actually might have it on an old laptop. I took a screenshot one time. I found there was a zip code that I loved. It was the Tower District, if anybody knows Fresno. It's a great area. All very cute homes. Every house is different. It's really cool. It's the older homes, right? 1920s and stuff.
Very cool.
New homes for you, but old homes for me.
Sadly.
But there's like, I took a screenshot. I remember it's like every house said, must sell, any offer accepted, must sell in all capital, and nobody was doing it. I remember buying 3 of them at that time. I bought 3 on that page.
And we don't want that to happen again because we know how that hurts people. But if it does,
I'm ready.
Exactly. We are ready and standing by, because again, I don't know about you, Mike, but I've also bought on the way down. Like I didn't know where the bottom was. And neither did I. So it was like when it was an outrageous deal, it was like, this is still 20% of my money. How can I not do this deal? Yeah.
For me, it went from like, I was doing 10% deals and then 12s and then 15s, because I would adjust as the market. I had no idea where the top was, but I took action. I had no idea. Like when I got out, the market ran another 10%. So I got out early, but I got out.
Right.
And then on the way down, I kept buying and buying until I couldn't get better deals. And then the market turned.
Yeah, it is an awesome thing. Mike, tell everybody where they can find you, my friend.
One rental at a time: YouTube, website, books, courses, Instagram, and 8 a.m. Saturday, 1 hour live stream. Have fun. I think that's tomorrow. Yeah, it's tomorrow.
It is. Come hang out, ask questions. As I always say, we like to create great content for you. I'm the Lumberjack Landlord. 11:30 a.m. Eastern time on Sundays is my live stream. And then Dion Talk Financial Freedom Tuesdays. His live stream is also fantastic. He goes until the questions are done. So if you're feeling funny, just keep on asking good questions and he'll answer them. Hit like, hit subscribe, and we'll see you guys next week. Mike, thanks so much for the time. Talk soon.
You got it.